Hello, chart watchers, and welcome to this Friday, June 8th Market Watchers Live show with your hosts, Tom Bowley and Erin Swinland. For those of you joining us for the first time today, welcome to the show. And for our regulars, welcome back. Taking a quick look at the market action today, relatively flat, although we are off of earlier lows. The Dow Jones Industrial Average has moved into positive territory now, up 9 points. The S&P 500 still down 1 point. The NASDAQ well off its lows, down 11 points though still. And the Russell 2000 showing a little bit of relative strength, up about 1.6 points. 10-year Treasury yield really just down a little bit. So we are seeing a slight rotation into the Treasury market this morning. Volatility index, which has been on the decline, is up a little bit today, up 3.3%. Consumer staples leading today. We haven't seen this too much, but we are taking out that late May high, and we are moving back toward the late April reaction high that we had near 51. The distillers and vintners leading the consumer staple area. You can see does have a very nice candle today, but we have been in a downtrend. So just a little bit of a relief rally, it looks like to me. Home construction making a really big move today, and I think this is very significant. We'll talk about this in a bit. Semiconductors pulling back after a really strong advance in May. A little bit of profit taking there. Procter & Gamble among those consumer staple stocks doing very well. Just kind of adding on to the strength that we saw yesterday, breaking into this gap resistance zone. And Intel, the main reason we're seeing a lot of weakness in the chips today, Intel back testing a key area of support near $55. Okay, Erin, it is Friday. Happy Friday. Welcome back today. Everything
Thank
good?
you. All is well. As Bruce Fraser said, I was on assignment.
Well,
hey, come on now. I'm surprised you didn't open with it.
I'm not.
Congratulations to the Washington Capitals.
All right. Thank you very much. Yes, it was a very nice evening for me last night. It's only taken us 44 years.
Right.
I guess I could say most of my life. But they started back in the 70s. I actually had season tickets to the Capitals back in the actually, I was probably in the early to mid 80s.
Wow. I had no idea you had been a season ticket holder. So you really are into hockey.
Yeah, I just couldn't take the pain anymore back in the 80s, and I had no idea it was just going to continue to get worse for the next 30 years. But anyway, we did it. We finally did it. Ovi got his trophy, the Stanley Cup. A lot of the folks that have doubted him, I guess, over the years, saying he couldn't do it in the playoffs. Well, he did it in the playoffs, so that was
good. Yeah, he totally came through. So deserved. Yes. Well deserved.
Yes, and we do have a very special guest with us today, Chip Anderson, president of StockCharts. Chip, welcome back to the show.
Thank you very much. I promise not to talk about hockey.
All right. Well, I got a question for you. That was a good segue because I'm going to talk about baseball. I had no idea until yesterday that the Seattle Mariners are leading the American League West.
That is true, although I'm sure that soon we will be mathematically eliminated.
It's just a matter of time. Doesn't matter where they are in the standings.
Yes, exactly.
All right. Well, Chip is with us. He is going to be giving you a few tips and tricks later with everything stock charts. So Chip, hang around. We'll get back to you in about 10 minutes or so. And with that, I am
yes, let's get with that weekly schedule. So Tom, you've got a workshop coming up next week on Tuesday, and I believe you're still taking requests for topics. So if you can go ahead and fill out that survey below the viewer and let Tom know what you might want to have him talk about next week, he'll consider it. And then on Thursday, we have our resident Bill Shelby from StockCharts.com, and he's going to be talking to us about his workflow, from what I understand. But for today, we have, as Tom said, we're going to start off after our technical news with Chip Anderson and everything stock charts. Then we have our segment, Are You Buying This?, which will follow. 10 and 10 to 1, we have the first symbol, one of the big ticker cloud symbols today, Teva Pharmaceutical. So if you want to go look at that chart early, and then I will finish off the day with the sentiment update. So let's get started. Tom, how about those technical headlines and news? What's going on?
Well, the 10-year Treasury yield's doing almost nothing. So if you're looking for action here, you're probably not going to be a little bit disappointed. We did have a reversing candle that printed on the 10-year Treasury yield yesterday. That's a bearish engulfing candle off the uptrend. So I'm not surprised to see us down a little bit today. I still think the overall uptrend remains clearly in play, and I'll be still, tooting that horn of a rising interest rate environment so long as we continue to hold this low back in the beginning of April around 272 or so. But the 10-year Treasury yield is pulling back just a bit. We only had one economic report out this morning. 10 a.m. Eastern, April wholesale inventories came out. They rose 0.1%, exactly what the market was expecting. Not a huge report anyway, and I think that helps to explain the lack of volatility in the bond market today. Apple came out, though, and announced that they are planning to, or they're expecting a 20% reduction in iPhone shipments this year. And you can see the stock did take a little bit of a hit, but technically, I think Apple still looks pretty good. I would watch the combination of price support here at 190, along with the rising 20-day moving average, which is currently around 188, because we do have a negative divergence in play here. You can see the PPO is not at a high, even though prices are. And when we got the big move back at the beginning of May, look at the volume coming in. But on the latest breakout, look at how the volume has shrunk quite a bit. So I think we have negative momentum here in terms of, and a negative divergence in terms of price action. And also, I think in terms of volume action, I don't really like that lack of volume on the latest breakout. So if we fail to hold this area of support, I think that there is a reasonable chance we're going to get a 50-day test. The 50-day is rising, but it's down just below 180. So that's something to at least keep in mind. Now, when Apple announces that they are going to reduce shipments, there are some suppliers that you need to kind of watch. STM is one. This stock actually has done pretty well, breaking out to new highs, but after it broke out above that January high on some decent volume, it reversed and came back down. And I think this one on the weekly chart was a little suspicious. Yeah, you can see on a weekly chart how it intra-week, we have the breakout above that $25 level. Actually, let me shorten this a little bit so you can see those candles maybe a little bit better. But here you can see the breakout above the 25 coming across here, the 25 level, but we haven't sustained it. So I think we've got a bullish pattern followed by consolidation, a continuation pattern, but we don't have that breakout yet here on this weekly basis. And with that announcement, I would not be surprised to see STM, ST Microelectronics, maybe pull back from that clear overhead resistance level. A couple of others, Cirrus Logic, CRUS. And by the way, these next two have not been performing nearly as well. You can see the daily chart since January. We've been in steady decline. And if we go to a weekly chart on Cirrus, you will see that we have been declining for quite some time. And notice each time we get to that falling 20-week moving average, that is about where we top out and then start the decline again. So I'm not seeing anything here except for perhaps a flattening PPO, maybe a slightly rising PPO. If we go back down maybe and take out that 35 level, perhaps we'll have a positive divergence beginning to build, but a little too early to make that call. And the last stock that I wanted to bring up is Finisar, FNSR. And the chart here looks kind of similar. We topped at the end of 2017, kind of been downtrending. Looks like, we've stabilized a bit over the past couple of months, but this is another one when you pull up the weekly chart. I've got some issues here. Trend line clearly established, really a channel after printing a double top back in late 2016, early 2017. We have been channeling lower here, and that failure right now at the 20-week moving average to me looks rather ominous. So I would expect to see a little bit more downside action here. Consumer staples, mentioned earlier that they are leading. Very odd and hasn't been happening very often where we have seen the XLP leading. And you can see that, again, since January high, we've been trending lower. Even with the overall market rebounding lately, we haven't seen much in the way of strength in the XLP on an absolute basis. And of course, that certainly means that on a relative basis, we are going to be showing some problems. So let me switch over to a line chart here. But here's the XLP relative to the S&P 500. So it really has not paid to be too involved in the consumer staple stocks. Definitely in a relative downtrend. See a little bit of strength today, but still overall, this has been a group to avoid. And I would say that you want to continue to avoid it. Within the group, though, today, we did have the vintners and distillers performing pretty well, leading consumer staples. But, it's mostly sideways action. I would say relative to the XLP, relative to consumer staples, this has been one of the better areas because we actually posted a high back in April. and we're not that far off of it relative to how far the XLP is off of its high. So you've got a relative leader within the group, but unfortunately, the group is not very strong. Home builders, though, this is one that's starting to pique my interest quite a bit. Home builders, after breaking down below a key support level right here, came back up, failed at that, looked like it was going to roll over, and we got a head fake. And now look at what's going on. We've come back up, printed a high, put in a higher low, and now we're breaking back out to a higher high. I think the home construction index actually starting to look pretty good. Now, I want to go back. We just talked a little bit about distillers and vintners and home construction. If you go into, from the member dashboard, the scooter reports, one of the things we look at sometimes when we do our updates is we'll talk about changes in the scooter reports. If I switch this to change, and let's take a look at the positive change, look at 2 stocks right at the top, home construction. So this is one quick way. If you happen to notice that an industry group or a sector is starting to look really good, one way to see some of the stocks maybe that are making a move that particular day is simply to come into the scooter reports and then sort it by change. From the members dashboard, you'll get, we can get the top 10 change, but this will give you all of them in order on the large cap basis. And then also you could switch that to mid cap or small cap. Down here, you can see distillers and vintners. Here are a couple of examples of stocks that are strengthening within that space. And you can do it if you're more interested in mid cap stocks. You could pull it up. Let's see if there's any in here near the top. There's a distiller. Let's see in home construction here. And then you could also do the same thing for small caps. So it's just a way to maybe take a look. There you can see a small cap home construction stock. Scooter 46. I would expect the scooters to be low because the whole group has been so weak in 2018. But we are seeing strength here. And if you click on it, you can take a look at the chart. It's not bad volume, I guess, but mostly sideways action, but it is having a really nice day today. So you can see why the scooter would be getting a jump as it is. Take a look at HOME. This is a company just reported earnings. They beat on their bottom line, 31 cents versus 27. Their revenues, though, came in just a little below estimates, but they raised guidance, which is important. Trying to make a breakout. You're getting a lot of volume here. A break above about 37. I don't even have to guess. Let me tell you what I used candle bodies. So it looks like 37.10 is the level that we want to get a breakout and a close above. Currently, we're at 37.35. But if we fail, you've got this tail on an intraday basis going up above these prior highs. So if we come back down and fail to hold after a clear breakout intraday, that would likely tell me that in the short term, we're probably going to get a pullback. You might be able to get it back closer to $35. So home looks good, especially with raising guidance, but let's see if we get that confirmed breakout on increasing volume. A couple of upgrades, downgrades. There's actually one upgrade, DXCM. Stock has been doing very well, and it is being upgraded today. You can see the stock was 52.5 back at the beginning of March, ran all the way up to 95. So not too far from doubling in a little bit more than 3 months. It's now getting upgraded and probably needs a little bit more consolidation. Even though we did gap up at the open and we are up $2.90, we're really struggling to build on it. And I think it's just because we're overbought. You can see the RSI has been up in the 70s or was up in the 70s for the better part of a month, maybe even slightly more than a month. So I would not be surprised to see the stock consolidate for a bit. CXO, this is a downgrade today. CXO has been declining rather steadily. We made a move up yesterday and essentially almost got back to the point where we broke down from on heavy volume about a week ago. And then comes the downgrade and back down we go. I would expect this to show more weakness as we move forward. Domino's Pizza, DPZ, downgraded. You can see, though, sometimes it presents opportunities. It's a stock that had broken out recently. I don't know what the reason was for the downgrade, but it may have been a valuation concern because we have made such a big run up. But notice, after the gap down at the open on the downgrade, we've got buyers coming right back in. And the last one I have is SIEN, which is Sientra. And a big breakout here as well. Nice volume, although volume a little bit lesser than what we saw back on the other breakout. But still, that's pretty strong when you look back at its history. Nice movement to the upside. And again, the fact that we were down a little over $1 earlier presented an opportunity. We got buyers coming back in. Okay, I'm going to turn it over to Chip Anderson. Chip, what do you have for us today?
Hi, Tom. Let me get my screen going, and we're going to talk about finding great investment ideas on StockCharts.com. Hang on.
Oh, I gave you
Actually, you stole a little bit of my thunder, not too.
Oh, I'm sorry.
Sorry. Let's see. So there we go. Finding great investment ideas on StockCharts.com. So the website has many different places, and you were just showing a couple of them there a second ago, where you can go to find interesting ideas, interesting charts to look at. If you're, after this show is over, obviously, because during the show, you'll get great ideas from Tom and Erin. But after the show, if you want to see what's going on, what are the interesting stocks that other people are looking at, what are the interesting stocks that I should be looking at, and maybe most importantly, what are the interesting stocks that nobody's looking at, there are several different places on StockCharts where we list great ideas. And so I just wanted to highlight those and make sure everyone was aware of them. It's great that you guys show these on the Market Watchers Live show from time to time. I think that's wonderful. And I just wanted to put them all together into one place, one presentation, so everyone could know about them. And these are things that almost anybody can get to. Some of these things you do need to be a member of, but most of them you don't. And they're also things that don't involve you're writing your own scans. So this is the stuff where you start out and you kind of get a sense of what's good and what's bad and what you like in terms of charts and in terms of charts of stocks that you're interested in. And then the next step after this would be to begin to write your own customized scan to find stuff that really piques your interest. But this is kind of a higher level, just how do I begin with all this stuff? And so we've got things like the top 10 lists and the ticker cloud that are available both in free versions as well as the members version on the members homepage, the sector and industry summaries, predefined scan results, blog posts, and public chart list. I'm going to go over each of those in a demo one at a time. So this is the members page. I think everyone's kind of seen this before. I just wanted to point out this is what the members page looks like when you first join StockCharts. There are just a couple of things going on here, but there are a couple of features that are hidden. We mentioned these before. I'm going to mention them again. The key thing that I'm talking about is, well, first off, the market overview will give you a sense. Is the market up? Is the market down? How is the market doing today? And we can see here today it was down, and then it's clawed its way back up. Second off, though, more importantly, is the market movers panel that we have over here. In this particular panel, you've got several different ways to pull up stocks that are interesting. You've got the top 10 list for the Dow, which is the default. You can also pull up the S&P 500. You can pull up the other ones. Top 10 on the Dow is always an interesting one. You've got percent up as well as percent down as well as most active. So right now GE is the most active one, but in terms of stocks that have gained in the Dow, P&G is the top gainer at this point with a 1.5% up. And Intel is the biggest loser at this point with almost a 2% down. So that's great, but it'd be really nice if we had more of these panels so we could look at some of the other things that are under these drop downs all the time. And you can do that as a member. You can click on the gears up here and click on additional data panels. And if you have not done that, you absolutely want to, in my opinion. Click on additional data panels and hit update. Down below, when you do that, then down below on the next line or the next section down, you'll have 3 of these market mover panels. And they start out all being the same. And the real trick here, the real power is to change them into other stuff that you're interested in. So I'm really interested in large caps. I'm going to stick with the S&P 500 there. I'm also interested in our scooter stuff that Tom was showing. These are the technical movers going up and down. I'm going to stick with large caps there. And then I'm very interested in the ticker cloud. So what's going on? What are other people looking at? So this is one way to set it up. Maybe also for Erin's sake, I'll also put on at the top here, I'll change this to be the DP signals. And so this gives me an overview of both the short and long-term views of the market, the trend. And then down on the second row, I can see interesting stocks that have been moving up or getting better technically, or that other people are looking at. And that's what these 3 panels represent. So for instance, today in the market movers, if we're looking at the S&P 500 and we're looking at the stuff that's going up, the biggest gainer right now at this particular moment is MNST, and I can just hover over here to get us to see the chart. I can go down to DHI, DH Horton and hover over that one, see that chart. This is a lot of what Tom just kind of reviewed. Here's Twitter with a nice little gain today after a big rise recently. So Twitter, all of these charts are looking kind of interesting. They're all kind of headed higher, which is kind of what we were thinking they might do. Similarly with the scooters, if we're looking at large caps, these are the ones with the highest scooters. So ABMD is our top scooter choice at this point. Twitter is looking really good, so on and so forth. But maybe what's more interesting, we can click top up. And again, now some of the same ones that we're seeing here are showing up in our as strong scooter stocks as well. And so that's also really interesting. But the ones that have had the biggest gain in their scooter values today show here, and the one that have the biggest losses in their scooter values show here. And then, as I mentioned, finally, this is the ticker cloud could be maybe the most useful, underutilized thing on the site in the sense that it's going to alert you to a stock that maybe there's no other way for you to know about. If this is showing stock charts that we've recently shown on the website within the past 5 to 10 minutes, and the size of the ticker symbol is proportional to how many people are looking at that particular stock. So at this point, IBM is high, Tesla is high, but we can also see, for instance, I'm very interested in some of the smaller ones here. Just because they're small here on the ticker cloud doesn't mean that they are not popular. It just means that relative to the other stocks on the ticker cloud, they're not popular, but they're still more popular than all the stocks that are not on the ticker cloud. So that's something to keep in mind. So if I see a symbol here that I'm not familiar with, then I always find that that's a very interesting thing to click on. Like, oh, I don't know, IYR. So here's IYR, a real estate ETF, and maybe I can spend a little bit of time trying to figure out what everyone else is looking at on that particular chart. Anyway, so that is the ticker cloud and the summary and the various top 10 summary panels that we have. Feel free to customize that. All the customization you do on these pages will stick, and you'll see it the next time you go, so on and so forth. Now, two other things I wanted to point out. They're here on the members page. They're also on the free charts page. You can go to free tools to find them. In fact, I'll do that here. Is the summaries. We got the market summary, as well as the sector summary and the industry summary. Tom showed you the scooter reports earlier. I'm going to look at sector summary right now. It's one of my favorites to go to. And what you can do in the sector summary with just 3 clicks is find the strongest stock in the strongest industry in the strongest sector. Really bang, 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 and there you go. So as Tom was mentioning this morning, right now, we're looking at the intraday period. For today, the consumer staples sector fund has the biggest change at this point. It's up 1%. So what I do is I just click here. Hopefully you've seen this before, and if you haven't, there you go. This is how Tom gets all of his stuff, people. I'm I'm showing you all Tom's tricks.
You're stealing my thunder, Chip.
I am absolutely permanently stealing your thunder here. So that's why he was going on and on about distillers and vintners, because it's at the very top of the consumer staples sector. And if we click on that, then boom, here are right now the top gainers in that particular industry. We've got these stocks here, and these charts might be very interesting to look at. I don't know, but they might be. In this case, wow, that's really not super interesting going sideways, but it did have a big gain, and maybe we'll see if it hangs on to that. Again, I just wanted to point out that you can very quickly, though, with the sector report, just bang, 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 get to the top sector, the top industry in that sector, and then the top stocks in that industry. So that's very, very convenient. You can also, if you want to, if you're not necessarily sector oriented, maybe you're more industry focused, we also have what's called the industry summary. It's the same kind of information, just displayed slightly differently. In this case, we've removed all the sector designations, and we're just focusing on those industries. You see there the cyclicals and the technology and the industrial, so on and so forth. So you can quickly see, like, for instance, if you're interested in the cyclicals, you can see that home construction is the biggest industry right now. Click on that, and we can see Century Communities is the biggest gainer at this point in that particular industry. So keep those in mind, the sector and industry reports. In a similar vein, it's here on Free Tools. It's also in the members page. We have our predefined scan reports. And this is also another area which I think a lot of people overlook. It's down here in additional tools and reports, we have predefined scans. You see it right here. In the predefined scans area is a whole collection of scans. They're not super sophisticated, but they are very interesting. Scans that we run on a regular basis throughout the day, every couple of minutes, and we update them, and you can view them in a variety of different ways. I'm going to do last intraday update just so that I can see what's happening today. So at this point, what we're seeing here are the results of each one of these little boxes is a result of a separate scan. So in this case, we're doing the new 52-week high scan, and stocks that are setting new 52-week highs that are in the NYSE, there are 92 of them. Stocks that are setting new 52-week highs that are a mutual fund, there are 186. And then over here, something to keep in mind, if you want to see all of the ones that are setting new 52-week highs, there are 247 of them, and they're right here. And that is a drop of 377 from yesterday. That's what that red bar means, and you can hover over that to get the actual number. But you can click on any of these numbers then to drill down and see what stocks are we talking about. So in the NYSE, there are 92. Here are those 92. And we can click on, for instance, we can click on volume and maybe do volume biggest to largest to smallest. And we see again that Twitter is topping that list. Boston Scientific, First Data, a couple other ones. So these might all be interesting stuff. SeaWorld, what's SeaWorld up to these days? Oh, nice rise after some big pop here, a little rest, and going up a little higher at $20. So again, my goal here is not to necessarily give you a guaranteed, here's how you find stocks that will always be good investments. But my goal here is to give you, here are stocks that are interesting. These are stocks that might be very good investments. These are, of the zillions of stocks that we have on StockCharts.com, these are the ones for you to be looking at and then trying to narrow down your particular criteria. So the final one that I had, well, I wanted to quick mention for the blog articles. Obviously, we have lots of commentators writing about lots of stuff. You also have the TV shows that you're seeing here. Those are all great. So don't forget about the blog areas. But the final thing I wanted to mention was an area that some people spend way too much time on and other people don't spend nearly enough time on. And that is our public chart list area. There's several different links scattered throughout the site to get you to the public chart lists. Public chart lists are collections of charts that are curated by you, well, by people like you, by other StockCharts members that have spent a lot of time finding and creating charts and annotating those charts and commenting on those charts and creating really interesting stuff that I think is worth looking at. Joanna Klein has been at the top of our list for quite some time. She has lots of followers. She has lots of people who think her stuff is great, and it's probably worth investing a little bit of time in seeing what Joanna has found that you might find interesting. But down lower, I'll suggest that maybe some of the real gold might be in this a little lower down, and some of these ones that have had, they've been there for a little while, they've earned a couple of perks. Maybe I'm just randomly selecting one here, but here's one that claims to show cup and handle, and we can see the amount of energy and effort that people have put into this particular one. There are a lot of indicators and a lot of grid lines on that one. But it's worth your time to spend a little bit of time, and maybe you can find one or two of these public chart list authors that speak to you, that really are finding stuff and showing charts that you find interesting. Here we see some with annotations. It also, if nothing else, could inspire you to show you what StockCharts is capable of in terms of the kind of charts that we can create and the kind of information that you can include on a chart, and then you can start to do that on your own. So this is the top one on the top public chart list. I encourage you to check those out from time to time and maybe subscribe, follow, or vote for authors that you think do a good job for you. All right, well, with that, I'm going to clear the stage. Just quickly, were there any questions, anything come in while I was giving my little talk?
Yeah, I was looking, and really everybody was mainly paying attention, Chip.
Of course.
But of course, there's always that question about new about adding things to the site. I think all of us do that to Chip. Even the commentators were always bugging him for something. But they want to know if anybody is working on scans for relative analysis, like stocks that perform better than their industry or index over the past week or month. Are there any scans or opportunities to create that kind of a scan?
Well, we're always looking for feedback from our users. We love all that feedback and we gather it all up. We're currently working, as you might know, on changing the infrastructure that drives the website. And that is our current focus. But once that's done, and one of the reasons we're doing that is because once that's done, then we'll be able to be more responsive to feature requests and to improving our existing features. Certainly being able to do relative scanning and scans that compare two stocks is something that people have been asking for quite some time. It's on our list. There's no doubt about it. I will, however, point out that, and this is a different talk, but that scanning is also extremely useful and should be focused on finding great stocks that you might want to invest in. It's more for finding stocks, just like what I showed here, that contain the characteristics of on the chart that you're interested in. It's for finding interesting charts.
All right. Yep, that was mainly what people were interested in. They were asking about a Russell Index holdings for scanning. I feel like we do that already.
Top of my head, I don't know.
Yeah, right.
Have to do some research on that one.
Yes.
Our customer support team is great. Always be sure to send stuff into them. They'll collect it all up and we get it in reports. So yeah.
Yep, that's pretty much the main stuff in here that I can see in the chat room. Did you have questions for Chip, Tom?
No, I think it's always great to go through and just highlight and give refreshers as to the power of stock charts. I mean, I'm not just tooting the horn of the company, but when I get on the StockCharts website in the morning, I go nowhere unless I have to buy or sell a stock, because there's so much information and there's so many different places where a lot of the research that ordinarily I'd have to do is streamlined right in front of me. So use those tips that Chip gave everyone. I use many of them myself, especially the sector summary and the industry groups and so forth, trying to find ideas, and then I can drill down using the scooter analysis or the scan engine or whatever to try to really zero in on some great trading opportunities. So certainly,
right. Maybe one of my key messages for today's talk is that a lot of people will immediately dive into very, very detailed sharp charts, or they'll try to do very, very detailed scans. Maybe they succeed or maybe they don't. Maybe they get frustrated, so on and so forth. But what they've done, though, is I think they've skipped over some of these easier ways to find interesting stocks to look at. Everything I showed you today did not involve typing. It just involved clicking, kind of looking around. And so don't discount the easy approach. This is something John Murphy has always been talking about from the beginning. It's something that I hold near and dear to my heart. Just because it's more complex doesn't mean it's better. You can get a lot of that same information by looking at these relatively simple and easy to access reports and tables and so on that we already have on the site for you.
Awesome.
Excellent.
Always a pleasure to have you on the show, Chip.
All right, thanks, guys.
All right, have a good one. Enjoy your weekend. Go Mariners.
Yes.
I got to switch over now to something else.
You don't have a baseball team?
I have one, but please let's not talk about the Baltimore Orioles. There will be no championships in our near future, I can promise you.
Yes, I'm more of an Angels fan than a Dodger fan, but I actually follow both of them here in the LA area. So
yeah, they're both pretty good teams. So
yeah, I think so. Last year, the Dodgers were certainly good. All right. Well, at this point, it's probably time to move into our second segment. What do you think?
It is. And this segment, for those of you who are new to the program, I think we've only done it once, maybe twice. But the segment is, are you buying this? And so essentially what we're going to do, Erin and I are going to make technical arguments, whether to buy or sell a stock, or maybe I guess we could make an argument on an index or whatever, and then have the other debate the merits of that claim. Would we be buying it? Would we be buying their argument to either buy or sell that particular stock? So do you want to go first?
Sure. Let me grab the screen here. All righty. Okay, so here are a couple that we're going to look at. I'm going to start with Voya because I know this one was very popular amongst you and the rest of the show. We were talking about those insurance companies in the small cap area. And so let's go ahead. I want to look at Voya. And here we go. I want to make this bigger for you. All right. So I think that, I know that a lot of us hit our stops on Voya when we got into it. At least I know I did. But now we're starting to see a bounce. I'm starting to see this ascending triangle, which is a bullish pattern. You can see right here, I'm starting to get I've almost got a PMO buy signal. And you can see how the bottoms are rising on the OBV. And so that tells us that we're getting a bullish confirmation. And of course, I always like to look at stocks that are sitting in the hot zone or are on their way into it, like we're seeing with Voya. So my question is to you. I know I would consider this a buy. I'd like to see it sort of poke up a little bit intraday above that overhead resistance, but I think this could be a really good buy.
I'm going to agree with you. I got stopped out of it. I actually had it, and I thought we were getting a breakout back at the. I would say it was. Well, let me go ahead. I'll show on
grab it.
the charts. But here, this is my relative chart that I like to use. And you can see the tops coming across here. This is a 1-year chart. And we really were struggling to get through about 55, 54, 75 to 55. And we finally did it. When we did it, look at the volume coming in. So that was the day that it actually caught my attention. And that was the day I bought. I was buying it on that breakout. It came back down and hit the 20-day moving average, which I was okay with. But then we had the gap down. I actually, early in that day, just took the loss on Voya. It did hold the prior lows. It's turned back around. It's come back up. And the reason that I did take the loss instead of holding on and giving it a little bit more room is that, number one, you've got a group, the life insurance companies that have been underperforming the S&P. So when I get a break below an area that I'm looking at, I don't want to allow it to continue to go against me and make a small loss into a big loss. So that's the reason I got out of it. But if you recall, one of the things that we had talked about was that the life insurance stocks, anytime that you get the treasury yield rising, life insurance stocks tend to do really well, but they hadn't been, they've kind of moved in a inverse correlation fashion with the 10-year treasury yield. So, and we know the 10-year treasury yield still is pretty close to that 310, 311 level that it hit recently. And yet life insurance stocks have continually been drifting lower. So it's been this inverse correlation that I think at some point is going to reverse. These two tend to go hand in hand. I'm talking about life insurance stocks and 10-year treasury yield. They tend to move together. So if the treasury yield does rebound and move to new highs, in my opinion, it's only a matter of time before life insurance stocks really begin to pick up to the upside. And Voya, when you look at Voya relative to life insurance stocks, you got a great performer within that group. So I do still like the stock. I want to see the life insurance stocks begin to pick back up again. I would have no problem getting back into Voya. I'm not going to do it while we're sitting in this sideways consolidation. I either want to break out or perhaps a move back down closer to that support level. But I'm kind of along, I'm thinking along the same lines as you. I think that this is still a nice looking stock. I just think the group itself needs to improve.
All right.
All right. I've got a stock for you.
Okay.
So let me pull my stock up for you. And I'm going to focus on earnings. These are companies that have had some pretty either beat on top line or missed on the top line. And I'll go ahead into the relative chart. Top and bottom line. I mean, they either beat on both or they missed on both. This one is Magna International, MGA, and it's in the auto parts space. And the stock broke out. It reported earnings on May 10th. That's when we got the gap up above the prior highs. Looks really good, moved up, came down, perfect test of the 20-day, put in a double top. I think off of this uptrend, we got a cup and a pullback. I think it's forming a handle. I'm bullish. I think that this is a stock that's been performing exceptionally well versus its peers. I love the price and volume trends here. I like the pattern. I think a pullback to test the 20-day moving average is an entry point. So my question to you, are you buying this?
I just took a quick peek at the chart and I'm going to bring it up, but I have to say, no, I'm not buying it. All right, so here we go. Really, my big concern right here is this top below my PMO signal line, and it's already sitting in overbought territory. The tops on the OBV are declining, and we're seeing mostly flat. So I would say there's still somewhat of a negative divergence going on there. I do like the fact that it has a pretty decent scooter, but the fact getting that top below the signal line, watching volume sort of trailing off here in general on that move upward. I don't see it being a good purchase just yet. I think it's certainly one to have on a watch list because of the earnings you were talking about, but I suspect we're going to have to see a pullback down to that 20-day EMA first.
All right, next up.
All right, my next one for you. Let's look at Cadence Bank Corporation. And today I did end up getting some, I'm sorry, yesterday afternoon I got some buy signals in the intermediate term for not only the XLF, but for the equal weight version. So I think the financials is a great place to be. I've got a PMO buy signal. Look at the volume is trailing upward as far as the OBV is concerned. We're starting to head back into that hot zone. And we've gotten this very, very strong breakout. I think that, on a 2% rise right now, it would be nice to see it maybe pull back just a bit, but I can see, a similar sort of situation with a cup. But we've been in this trading range for so long, and now that we've bumped out of it, I think that looks good. I've got rising bottoms on the PMO, rising bottoms on the price for Cadence. Cade.
Okay. I like this one a lot. I've talked recently about the regional banks, which I think is the strongest part of the financials. This is a group that tends to do extremely well when yields are rising, and of course they have been in an uptrend. And I think the smaller banks are getting a lift because small caps have been outperforming. This is about a $2.5 billion regional bank. I love the pattern here. I like the higher highs, higher lows. We really struggled getting through 30. We did make the breakout. If there's one negative here, I would like to see maybe just a little bit more volume on this breakout. But I do like the PPO turning back up again. I think this is a good one.
All right.
Next up.
Yes.
Lennar. I talked about home builders earlier, and I have to fully disclose that I've actually purchased Lennar. I'm not typically a bottom feeder, but I've been watching the home builders for quite some time. I think they're turning up. Lennar did beat top line and bottom line recently in its most recent earnings. That was back here in April. And since then, we have seen the stock drift even lower. But on this latest push to the downside, low price, check out the PPO, which had a positive divergence. I think the initial test comes at the 50-day moving average. I think if we go through that, we put a bottom in on Lennar. What do you think? Are you buying this?
Absolutely. I looked at this chart. I definitely like it. I'm on board with you here. Let me show you why. I don't know why it keeps going there. All right. So I like the fact that if I look at this, I suspect we're looking at a double bottom, a little bit of a complex one, but we're getting ready to have that breakout. Look at the PMO out of oversold territory. We got that buy signal and it's moving gently up. It could take, a lot more momentum and move it much, much higher. So I do like this one. And yeah, I'm buying this.
Yeah, I would say too, look at the on balance volume with all the selling that's taken place over the past 3 or 4 months, and the on balance volume still is fairly close to the high. It has not been coming down with the price.
No, absolutely. We're seeing pretty much flat here for the OBV, and I think that also is good. And look at the scooter. It is starting to make its way back up. I think the only thing I would warn about is that, the EMAs are configured negatively, with that 50 pretty far below the 200. But I think a breakout above that 20-day, is very positive. Now I'd be watching for the 50 days resistance, but I think it looks good. I would expect it to break out further.
Yeah, also, one last comment, that 50 area that it hit recently, if you go back to September, it's coming back down and hitting a pretty solid area of price support as well.
Yeah, absolutely. Okay, the next one I have for you, I'm going to look at Ruth Chris. Ruth's Chris. I like this one. It's came up on one of my scans, and you can see it's in a nice rising trend channel right now. It has started to pull back toward that 20-day EMA. I know you usually like to see that, Tom. And while the PMO is starting to decelerate somewhat, that makes sense. We're getting that little bit of a pullback, and the scooter looks good. Look at the OBV. Bottoms are rising with the bottoms in price. And like I said, we've got a nice rising trend channel. And I'd like to see it hold that 20-day EMA, but yeah, it might have to test the bottom of this rising trend channel. But I think with the PMO starting to look good, and the bottoms aren't too bad here as far as whether they're pretty much even. So I think this one looks pretty good. What do you think?
I love it. Yeah,
I love going and eating there too.
Yeah, I would like to disagree with you on one of these, but this one I think looks really good. The only problem I have with it is the restaurants and bars overall have not been performing very well. You can see that if we go all the way down here, the bottom, this is the restaurants and bars relative to the S&P 500. So just no excitement in the group. I mean, McDonald's just did make a big move yesterday, but when you look at Ruth and the move that it's made relative to its peers, since really since the beginning of the year, this has been a huge move to the upside. We've gotten a little bit of relative pullback, which I like. And when you look at the overall group in the restaurants, we're actually breaking out above high. We've been trending a little bit higher, starting to head for those highs. But look at where Ruth's Chris Steakhouse was back in mid-January. It was about $23 when we topped in the group. And now we're still much lower here in the group. And yet Ruth's Chris Steakhouse has gone from $23, $24 up to 28 and above at that early May high. So I think you got a really strong stock within a strengthening group, and that is normally a good combination. So I'm going to go with you. I'm going to buy that one.
All right.
Not literally. I'm not saying literally.
Oh, right. Exactly. That. I guess we should preface that.
Yes. Okay. I'm going to give you one.
All right.
Let's see here. Fluor Corp, FLR. I think we're going to disagree on this one. I just have a feeling. But Fluor missed on its top line. It missed on its bottom line. You can see the stock got absolutely crushed from about $59 down to opened at 47, went as low as 44. It has made this push back to the upside, but I see the volume declining. I think this $50 area is going to be a trouble spot to get back through. You got the 20-day moving average and anytime I got a PPO below the center line and I rise back up, test that 20-day moving average, I do not like it. I would actually be a short seller. If I had to do something with this stock right now, I'd sell it. So my question to you is, are you buying my argument?
No, actually, we do disagree on this one.
I had a feeling.
Yeah. Okay, let's see. Let me grab this. No, I think it still looks pretty good, and I'll explain what I'm liking about it right now. Right now I see this, rising bottoms here. Look at my PMO. We got a buy signal in oversold territory. It's starting to head back up. We haven't gotten that breakout yet, but I would be looking, this is kind of like an ascending triangle here, and that's a bullish pattern. Typically, when you get these gaps too, you want to watch for those to close. I think my caveat here would be that 50 is getting ready to turn down below, cross below the 200, and that would put this stock into a bear market configuration. So we need to see the breakout sooner rather than later. But I think the PMO looks really nice, and look at the scooter, it's starting to improve. So yeah, it had a bad time, but I'm looking for the breakout here.
What do you think on a weekly chart?
Oh, that's a good question. Let's see. All right. Yeah, the weekly chart doesn't look quite as tasty. But we do have some, support here from 2016, you could look at, and we haven't had that negative crossover just yet on the 17 and 43 week EMAs. But yeah, I have to agree. I mean, the momentum doesn't look good here, but of course it doesn't. We had that giant decline right there, and the PMO was overbought. It needed to come back down and start getting, less overbought and move closer to neutral. But yeah, maybe on an intermediate term, not as tasty on the weekly chart. But I think the short-term chart looks decent. I don't think I'd be shorting right now.
Okay, fair enough.
All right. We're about done.
Yeah.
And since I started, I think we probably should just go ahead and move into the 10 and 10. We've
Yes.
had lots of requests. If you haven't already, I'm not going to be taking any new I'm not going to be taking any new requests here, but you can still vote by liking other people's symbol requests, and the most popular will be our next symbol. Currently, GALT is winning as most popular. So get your votes in and we'll see if that one holds. But the first one is TIVA, which was actually a request earlier today.
Well, before we go into that, I don't know if we still have it, but if our wonderful producer could pull up, we do have a summary slide. There we go.
Oh, of
On
course.
the, are you buying this? So these were the stocks that we covered. And again, I think this segment is really cool because you take two different views of one stock, and sometimes we agreed. I actually did agree with all of yours. You didn't like mine today, but that's all right.
Yeah, not quite as much, but I know we agreed on one or two, right?
Yeah, I think overall they were all. I think there were some pretty good arguments on both sides.
Absolutely.
So okay, let's go on into the 10 and 10. What was that first 10 and 10 stock, by the way?
TIVA. And that was high in the ticker cloud that Chip showed us earlier, but I had already found it there. I thought it looked like an interesting chart.
Okay. Tiva. Yeah, I really like this. I like the breakout and I love the volume coming in here. This is either going to be a confirmed breakout or a huge disappointment by the end of the day today. I love the fact that we had this high back in January at around $22, went up, tested it, pulled back a little bit of a flag, and then making the breakout. And look at the volume picking up. We're only at the halfway point of the day, and we've already traded 13 million shares. So if we get up to the 25 million share level, I think that's pretty clear that is a heavy volume area for this particular stock. So I think that level right there at about 22, maybe just a little above 22, 22.10, 15, something like that, is a big level. And here we are breaking out above it on increasing volume. If we hold it into the close, I really like it.
Okay. And the most popular right now, let's go check it out, is, yes, GALT did end up winning out, just barely edging out NVIDIA.
All right, let's take a look at GALT. Huge move. I like the fact, and this is what I talk about when we're downtrending. If you make a break above the 20-day, you expect that 20-day to hold. We didn't do it there. We came back up here, looked like maybe we were trending, and then we didn't hold the 20 and continued moving lower. Now we make this breakout. Look at the volume coming in on the push to the upside. And now the pullback is holding the rising 20 as it continues to move higher. That's a big difference. And I think a lot of times seems simple enough, but I think that's a clue as to whether or not you're going to get an uptrending stock or whether or not you're just still stuck in sideways consolidation mode, because moving averages tend to hold as support during uptrends or downtrends. They hold as support and or resistance. But when you get the move up and then you pull back and you don't hold these moving averages, that's a sign that you're in a period of consolidation. The moving averages are kind of going up and down. Prices above it, then it's below it, then it's above it, then it's below it. But now you can see the difference. And we've also got a nice bullish cross here. So I like what's going on here. I love the volume trends. It is overbought though. So I would say if we could get a pullback maybe to the area of this latest breakout, which I'm going to say is down in the low fives. I know we're at 593, but this is a volatile stock. You can look at a lot of these different candles and you can see how wide some of these candles are on a daily basis. I wouldn't be shocked to see a move back down at some point to low fives, and that's where I like it for entry.
Okay. Let's see. The next one I'm going to give to you is RIG. And I believe that one is an ETF.
Now, this is Transocean. This is a really nice looking chart as well. I'm glad on the last pullback that we didn't fall back below the earlier low. And I'll tell you why. Let's draw a couple lines here. First, that was the prior high back in January. We took that out. We were kind of hanging above it, and then we went down. But look at what we did. We tested the 20-day and then turned up. Now we've got a negative divergence. You got higher prices. You got lower PPO. That is just telling you that the price momentum is slowing, and I would not expect the 20-day to hold. That now I start to think maybe we're going to get a 50-day test. We almost got to the 50, and that is just about where that price support level was. So we were moving back down, and this is what I talk about whenever reward to risk comes up. If you buy it at 14 with a negative divergence, and you know that it could go down to the 50-day moving average, in essence, you're going to be down $2 or more than $2 when it gets down to that 50-day. But if you wait, put it on a watch list and wait, as it gets closer and closer to the 50-day moving average and this price support level, your reward to risk goes through the roof. That way, if you're wrong and it goes below the support level, you get out with a fairly small loss. But if it reverses like it has and makes a run back for 1375, you make quite a bit of money, more than 10%, probably about 12, 13% in 7 or 8 trading days. But I really like Rig. I think it's continuing to trade in a range right now. But I think anything back down in the, I'm going to say 12 and a quarter down to about 1160 area, that is where I see an accumulation zone on Rig.
Okay. Let's see, let's try PayPal. We haven't looked at that one for a little while.
All right, PYPL.
Yep.
Yeah. You know, this could be on that segment that we have every once in a while, turning point, because literally there is your resistance from January, and look where we went before we turned and moved back lower. Now, I think short-term momentum is very bullish here. So as it pulls back, I like it on the 20-day test. So if I were annotating this into a watch list, I would just, you know, make a little note to myself. 20-day moving average is what I'm watching for here on a pullback.
Okay. Next one is our only materials request, Lithium Americas, LAC.
All right, LAC. Not excited. This is another one. I mean, not holding on to this support level on the recent breakout to me is just a little bit of a red flag. Actually, it's a big red flag. So I'm not a huge fan. I mean, we had this support level. You can see it was holding for a while. Look at the volume pick up as we broke down below, came back up, couldn't get through it. And then we had the huge volume to get through. Should have held coming back, maybe give it down to the 20-day, but it continued falling lower and lower. Now it's going back up to the $6 level and looks like it's reversing back down. It's been in a lengthy downtrend. It's not showing me enough. I would avoid it.
Okay. And the next one, AT&T. We have not looked at that within the last week, so let's give it a try.
Okay, AT&T, yeah, it's definitely strengthened more than I expected. I was not thinking we'd get through this area of gap resistance. You know, maybe it's because the overall market has been so strong, you know, rising tide lifts all boats kind of a thing. But I think there are 3 levels. You got first the bottom of gap resistance, which we did pierce, and we did it with some good volume, so that's a good thing. This was the prior low, so broken support becomes resistance. That's where we are now. And then finally, that if we can get through this 34 area, 34.10, I think we've got a shot for maybe 35 and a quarter to the top of gap resistance. But the overall downtrend here remains in play. You know, you can compare this against a lot of stocks out there, and I think you're probably going to find that this is one that you really want to be careful with. And for me, I'm just not interested. The trend line also intersects in this area. I just think there's too much overhead resistance here to like AT&T. I do like some of the volume coming in, but it would have to clear some other key levels before I would get excited. There's too many other stocks out there, in my opinion, that look better.
All right. This one did come in second as far as popularity, and we have not looked at it in over a week. So NVIDIA.
All right, NVIDIA. I do want to mention that NVIDIA, I think from the seasonality chart that I provided maybe a week ago during the seasonality report for June, it does have a rough period in June and July as we go into summertime. So historically, it doesn't do well. Now, we opened June pretty well. We've been struggling a little bit here. I would watch 2 areas on NVIDIA. I still think overall, considering what the chips have done, pulling back today, I think it's still holding up just fine. But you do have short-term price support around 260, which is holding so far. The PPO looks pretty good. So I'm going to, again, highlight this rising 20-day moving average. We haven't had a close below it in the past 5-6 weeks. And so I would not want to lose the 253, 254 level.
Okay. Let's look at an ETF, the gaming ETF, BJK.
BJK?
Mm-hmm. The VanEck Vectors gaming ETF.
Okay, I think Greg
Blackjack, right?
What's that?
It's like blackjack.
Oh, there you go. Yeah, I was trying to figure out what the BJK was. That's duh. Yeah, BJK. I think Greg Schnell wrote about gaming stocks not too long ago. I don't think he talked specifically about this particular ETF, or maybe he did. I'm not quite sure. But it is, it is backing off of some resistance. You can see there we made a breakout. Looks like things were really picking up. And I don't pay too much attention, by the way, to volume in an ETF. An ETF is designed to go wherever the basket of stocks goes that it holds. It's not like an individual stock. It's not traded like an individual stock with a lot of market maker manipulation and all those things. So I don't pay as much attention to the volume on these. I just want to see the price action. We are sideways consolidating. I'm guessing if we went back a little bit longer, this sideways consolidation follows an uptrend. So I think eventually we'll get the breakout. I would maybe be watching a couple of areas. I think the first one, we're really just about there, because in the short term, we moved up to 48 and a quarter, pulled back and broke through. And now we're coming back down testing 48 and a quarter. I think if we fail to hold here, I think there's a good chance we go back to 46.50. So I'd keep those two levels in mind.
All right. And number 9, let's look at FedEx, FDX.
I believe FedEx was starting to look really good.
Yeah, I was looking at the thumbnail, and it looks pretty good.
Yeah, I really like this breakout here. After months of consolidation, you can see pretty easy when you draw these support resistance lines on here. It's probably my favorite annotation tool, because I am such a watcher of price support resistance. But here you can see the multiple attempts. After we gapped down early February, we did go back up and try to get through $255 on multiple occasions. Look at that false breakout and then failure. And if at the end of the day you're holding, you're like, well, it was up at 258. I don't want to get rid of it at 247 or 249. Well, look what happened the next 2 days. Same thing here. We get up into that breakout zone. We fail to hold. Back down we go. Here we put in a dark cloud cover, reversing candle right at resistance. Back down we go. Now we make the breakout with volume beginning to pick up. I think this one runs up to test the 273, 274 level.
All right. And our final 10 and 10 will be Geron Corp, GERN.
I think we may have looked at this one on the scooters not too long ago. This one I think might be in the biotechs.
Yes, it's a biotech.
Okay.
I'm not liking the look of the chart, but
well, it's a small stock. Let me show you the key level for me anyway. If I was holding this one, I really don't want to lose 3 and a quarter, because that, after the huge move on big volume, this is your reaction low. We've been consolidating. We've been down here twice now to 3 and a quarter. I actually am okay with it on light volume if it hits 3 and a quarter, but I'd keep a tight stop. And if it fails to hold that 3 and a quarter level, I would be out. I think the next level to the downside would be about 270, and I don't want to follow it all the way down there. So that's, at least a support level that I would watch. I do think that the huge volume that came in and all this consolidation could result in another big move to the upside. But I do agree that based on the pullback here and how much further it could go, 50 cents on a 375 stock is just too much for me to risk. So I would be holding off. I wouldn't do anything with it right now.
all right. And that concludes the 10 and 10. These are the symbols that Tom covered. I will have those up in the Market Watchers live chart list at the end of the day. So go back if you want to go ahead and copy those charts or get those annotations on those charts. You can just go to the Market Watchers live blog, and the link is right there at the top. And it's also at the top of every Market Watchers live recap. All right. We have something really important and big coming up in August. And that is ChartCon 2018. To get information, you want to just go to StockCharts.com/ChartCon, and that is going to bring you right here to this page. We will be, as it says, streaming live this conference on August 10th and 11th, rather than make this a come to us kind of convention for chartists. We wanted to include as many people as possible. We streamed it in 2016 and it was a big hit. So we're going to stream it again this year. There's social media opportunities to interact with all of the speakers. If you want to get more information on the agenda and who the speakers are, again, StockCharts.com at /ChartCon, and you'll get all of this information and the opportunity to register. It's only $250. I mean, this is such a bargain considering all of the big names you're going to get to see, and I am sure you're going to get at least 1 or 2 tips or tricks that are going to make you far more than $250. So I recommend you check it out and consider it for August. Okay, what has been going on in the markets since we started this program? Let's go ahead and take a look. All right, I'm going to look at the candle glance first of the 12 major charts that everybody is looking at these days right now. As you can see, it's been, it was a rocky morning, but we've managed to, you can see the Dow and the S&P have all broken out and they've headed up. They are starting to consolidate in the Dow. We are seeing a little bit of a pullback, but I think you could make a case for some flags getting ready to set up here. The NASDAQ, interestingly, yes, it did make it to positive territory, but certainly not the kind of breakout that we saw on the Dow and the S&P. And mid caps looking great. They didn't spend much time in negative territory at all, and they are shooting up. They are now sitting right around their intraday highs. Russell 2000 small caps, and again, they barely spent any time in negative territory today. They have been on the upside, and now we're seeing new intraday highs starting to be set on the Russell 2000. Canadian markets, unfortunately, staying underneath yesterday's close and have been sitting in the negative arena all day and morning. We can see there was that attempt when we saw the breakouts on our major indexes. There was an attempt to get back up into positive territory, but at this point, the Canadian index TSX is starting to head back down after failing to break out into positive territory. Treasury yields mostly flat today, reading currently at 2.9293%. The VIX mostly unchanged. We did see it rise slightly, but it didn't even get past yesterday's reading. And currently we're right around 12.3 for the VIX, which is showing a lot of complacency right now. Commodities, DBC is up slightly, but mostly unchanged at this moment in time. USO had a difficult lunchtime, but it is starting to move its way back up, and it's taken back, it's cleared out half of those losses that we were seeing earlier. UUP, the dollar is gapped up, but it is pulling back right now. And you can see with gold, we did get a gap up on gold as well. And it is mostly consolidating sideways. Currently gold at 123. As I had mentioned earlier, gold is really starting to decouple from the dollar. So seeing them both up at the same time is not as unusual as it normally is, because the correlation has been, the negative correlation has been lessening. Let's go ahead and take a very quick look at the home page to look for our predefined alerts, see if there are any headlines, so to speak. Let's see, my alerts, I want all of the alerts. Oh, I'm not showing any right now. All right, so no predefined alerts to cover right now, and that concludes our final market update. Was there anything you wanted to point out, Tom?
You could probably pull it up, but for the first time really in the last 6 or 7 days, we're seeing the dollar, the UUP, bounce, and it is bouncing off the 20-day moving average. So I think that's somewhat significant and, kind of timely. We're seeing a little bit of strength in the Russell 2000 as well. So we'll see if that relative strength that we've enjoyed in small caps for the past couple of months begins to resume again.
Yes, we'll see. I'm still kind of looking for some consolidation, maybe a little bit of movement in this trading channel about 2450 to 2470 for UUP, mainly because I got this PMO sell signal. I'm not looking for a big correction or decline here. I just think we're going to have to see a little bit of decline and then some sideways movement. That'll clear that overbought condition on momentum. All right, I think it's time now for my sentiment report. So let me go ahead and get those charts up there for you. All right, we are going to look at the put call ratio first, but before I get into this, I do want to preface that you want to look at sentiment, and that of course is the I guess the feeling of what's going on in the market by market participants. And one thing to remember about sentiment is that if everybody is bullish, that is bearish for the market. And likewise, when investors are very bearish, that is bullish for the market. So you want to see those extremes in sentiment because that usually gives you a clue to a reversal. Today, I didn't see much that interesting in the sentiment charts, but we're going to go over them, of course, and see what we are seeing currently. So the put call ratio is one that I look at. We get the CBOE, equity, and OEX. The OEX doesn't always go in line with the CBOE and equity, and mainly because the OEX options tend to be used as a hedge. So you might see opposite action in the put call ratio in comparison to the CBOE and the equity put call ratio, just FYI. So we did get a top if you look in the thumbnail, and we are seeing a decline in the put call ratio. That is actually somewhat bearish because we want to see readings moving bearish as far as sentiment. That means we need to see the numerator in the put call ratio far outperform the calls in that ratio. And so that would give you those higher readings. And that means that investors are very bearish, and that would be bullish for the market. So looking at this, we're sitting there near the lows we've seen on the put call ratio for the equities and CBOE. So although we are seeing a bit of a decline here, meaning people are starting to feel a little bit more bullish, overall, we're looking at these ratios, and I think they're pointing neutral. But we just want to keep an eye on the sentiment. If people start to get really bullish and we start to see a big time pullback here, then we should start expecting bad things for the market. But right now I'm looking at this and it's, mostly neutral. The American Association of Individual Investors, they have a poll on their website. If you go there, everybody can take it. And you basically say, hey, I'm a bull or I'm a bear this week. And so they tally all of that up, of course, and we get the readings. And currently we're looking at 38.9% of the AAII pollees are at, that they're more bullish, but we're not seeing over half of them bullish. So they're not really bullish, extremely bullish. And the bears are still less than what we're seeing on the bulls. And, just looking at the range right now for these readings, they're pretty much on par with what they normally are. These are not, I wouldn't consider these spikes or extremes right now. We are seeing an elevated bull bear ratio. And, the more you elevate this ratio, that means the more bullish everybody is. And right now we're, obviously the ratio, when you look at these numbers, about a 1.5 times amount of bulls in comparison to bears. So while it's somewhat elevated, it's not really an extreme at this point. I don't look at it as climactic. And consequently, I think that this chart is also showing mostly neutral as far as sentiment is concerned. So there's a lot of indecision out there right now. The next one we're going to look at is the National Association of Active Investment Managers. These are the big market makers, and they tell us every week what their exposure level is to the market. So we look for these extremes. We want to see when the money managers start to get, again, extremely bullish, because usually when you see those extreme readings, you should expect to see a reversal from, if you're in a rally, you'll probably start to see prices move lower. And that we do have an elevated reading here. It's not an extreme, obviously, but it's certainly higher than the majority of readings that we're seeing here. And so that tells me that the investment managers are feeling bullish. They're not at bullish extremes just yet, but they are very close. And so I would look at that as neutral to bearish for the market. And I say neutral in that a lot of times, and I think this extreme is a great indicator here as to what I'm talking about, is we get the spike, we ended up with some upside because, I mean, these are the market makers. They can be, you know, right a lot of times when they start moving up. So I would expect to see maybe a little bit more upside or some consolidation off of this extreme reading, but I'm reading it as neutral to bearish for the market because I think we could see a little bit more upside. We could see exposure levels move a bit higher off of this low that we saw back in early April. All right. The next one we're going to look at is the Ridex asset analysis chart. All right. So let me explain this chart. I always explain these before I give you my reading, my analysis of the reading. So I think it's important you understand what this is actually saying. So there is a basket of funds out there that Guggenheim actually manages, but they used to be managed by a company called Ridex. Some of you may remember them. And it's a great pool of the market and in general. It's all those ETFs, those, you know, the bull and bear ETFs and funds. And then they give us the assets also for the money markets, what's being held in cash. So you know, when you look at this, it gives you a really good sense as to where the money is flowing. And from that, you can determine sentiment. So if you start to see a lot of money moving into the bear funds, obviously that means people are feeling more bearish, and that is bullish for the market. So you look for the extremes there. If the bull sector is starting to increase, that means we've got a lot of bullish activity out there. They are, you know, starting to move their way back into the market in a bullish way. And then with the money market assets, you know, if you have a really high level there, that does imply bearishness. If you've got more people sitting in cash, you've got a lot of assets there, that could be considered bearish. Seeing money being pulled out of money markets could be considered bullish. And I would say even if they start moving a little bit into those bear funds, just the fact that investors don't mind being exposed to the market. They're pulling money out of cash and then they move them in a way to expose themselves to the market, whether a bull or a bear. So with that, let's look at what this chart is telling us. This is the bull-bear rate, or the bear to bull ratio. So the more bullish people are and the more money is in the bullish assets, the smaller this number is going to go. And of course, if you get preponderance of bear and money market assets in comparison to the bull assets, that's going to raise the ratio as it goes along. So I like to watch the ratio. I like to see these rising bottoms trend lines, see what happens at certain areas of support resistance. It's a relative, you know, it's a relative ratio. And so that's one of the ways you can use it. So right now, as far as rising bottoms on this ratio, we're starting to flatten out. I'm not seeing, we're not seeing a decline really in this bull bear ratio. And, you know, that tells me that, you know, the market is somewhat stagnant. We're not really getting much difference between those bear and bull funds. So it's really staying flat. So we're not really seeing that much more exposure to the market at this point. And when you look at the actual readings in assets for the bear funds and the bull funds, we're not seeing a whole lot of action here either. I'm going to direct you over here to the thumbnail. And there's that flat ratio, which is telling me there's really not that much of, that much change going on. And you can tell that just by looking at the assets in the bear, money market, and bull funds. So what I see here is obviously a you know, steep pullback on the bear funds. I think that as far as money market funds go, we had a bit of a pullback, but we're starting to see it turn back up. I would say this is a mostly neutral reading. And then with the bull and sector funds, it's very flat as far as assets. We're really just not seeing the money pouring in there that you would expect as far as, bullishness and a rally and that sort of thing. I mean, look at the market has been moving moving higher, but we're seeing not a lot of action in the bull sector funds. So when I analyze this whole chart, as a whole, I mean, you have to look at this as neutral. We're just not getting any climactic readings. I think the closest you could come is the fact we're pulling money out of those bear funds. And so that would maybe show you that investors are feeling a little bit more bullish just because they're taking those hedges off the table with those bear funds. So I think we're still, when you look at the whole picture, and let's go ahead and bring up, actually, let's bring up the poll, because we always look at, I turn in all of our survey responses on Fridays to the Wall Street Sentiment survey. And so this is the readings for what the market timers in the basket of people that he asks, what they're thinking as far as being bullish or bearish. It's a weekly, it's weekly, so you're going to end up seeing the values be a little bit different, but that's what we do. I look at these polls. I turn in Tom's vote for next week. I turn in my vote for next week, and as well as the audience. So when you participate in this poll, it is actually going somewhere of interest and use. So I really like it if you fill out this poll if you haven't already. And I know even in reruns on the StockCharts TV blog tab, you should still have access to that poll. And as you can see, currently everybody is feeling a bit more bullish at 43%. But I notice, at 31%, a third of people feeling somewhat bearish going into next week. I find kind of interesting. My vote is in the higher category. What's yours going to be, Tom?
Oh, well, this is a tougher one for me. What did we say? Mostly unchanged. What does that cover?
That's pretty much, within a 0.25% or so, you're going to see action that kind of cancels itself out, basically.
Yeah, I think we're going to run a little bit higher next week, but I think we're going to consolidate that double top from February and March between 2775 and 2800 on the S&P. I think it's going to present some difficulties, and we're at 2775. Also, I'm looking for the dollar to bounce again, and I think that's going to make the S&P struggle. So I think because we're making this call on the S&P 500, I actually like the NASDAQ and the Russell 2000. But I think because we're getting close to resistance, I know I've been mostly bullish the last few weeks, but I'm going to say mostly unchanged for next week.
All right. Interesting. Yes, you hardly ever change that vote. So that
Yeah,
I think that's telling.
Yeah, I'm a pretty bullish guy most of the time, and I'm sure there's some out there that say, no, you're just a perma bull, but I'm really not a perma bull. I just really like the market. I think that all the signals have remained very bullish. I love the fact that we're getting the outperformance from the NASDAQ and the Russell 2000. I think that continues. The dollar strengthening, which is really going to help the Russell, I think, on a relative basis. So that's why I am mostly bullish. But I do recognize the overhead price resistance, and I think we're getting close on the S&P.
All right. Let's go ahead and summarize the sentiment report so far for today. There we go. So the first one we looked at was that put call ratio. And currently it is headed lower from neutral territory, but it's still mostly neutral. So I'm looking at it as neutral for the market. Bull bear ratio is elevated on AAII, but I don't read it as climactic just yet. So I would say that makes a neutral to bearish for the market. Name high exposure that's very overbought right now. I do think that's bearish for the market, but it might take a week or two to get that decline based on that, because I think those money managers are pretty much they're usually pretty right on at first, and as the exposure gets a lot higher. So then you have to worry. Slight increase in the exposure on the right X ratio, meaning we started to see a little bit more monies going into the market, exposing to the market. But I'd say it's still neutral, because when I look at the ratio, the bear bull ratio, it doesn't, it's not telling me that we're seeing any climactic activity or anything like that. So I would read that as mostly neutral for the market as well next week. Sentiment is also mostly neutral. When you're looking at the big picture, you have investors and managers that are showing up with some bullishness, and that tells me that that would be somewhat bearish for the market. But overall, I would say that it's neutral. I think it's really less than helpful this week. But I think it does maybe bolster your position, Tom, on next week turning out to be more consolidation and mostly unchanged, and not, a big time week.
Yeah, I think that there are definitely some headwinds facing the market. I do like the fact that the Dow finally broke above 25,000 and is moving higher. I think there might be a little bit of room still for the Dow, but I look at the Dow 25,750 as being a really important level over the intermediate term, because that was the reaction high back in February when we had that first big downdraft to open February. Then we had a really nice bounce back rally. We were down below 23.5 and we went all the way back up to 25,750. So it was about a 10% move back up, and we haven't been able to negotiate that level since. So I think I could see, some areas of the market doing pretty well next week, but I do think the S&P, because it is up against resistance, I think we need to be a little careful there.
Yep. I can see your point there for sure. Man, what a great show today. It's always great to have Chip Anderson on and giving us some extra help and hints on finding, good investment opportunities just from what's already there.
Yeah, we had a really good week this week. I mean, we had Charlie Kirkpatrick on. Of course, Bruce came in yesterday and subbed for you. He did a great job. And then we had Chip on this morning. So got another great week ahead.
Absolutely. And that means you've got to get started on your workshop maybe over the weekend.
Not happening. No, I've got family and friends in this weekend. I'll take the weekend off.
All right. So Tuesday, Tom will be doing his workshop. And on Thursday, we do have Bill Shelby coming in. He is one of our friends at StockCharts, a developer, and he's going to show us his workflow, because he is a regular trader as well. So he's going to show you how he uses the site to help with his trades. So that should be a great program on Thursday of next week.
Yep. And as we close out this week, just want to mention again, home construction having a really nice day, up 3% on the day. So home construction trying to reverse its downtrend over the past few months. We'll see whether or not that can continue into today's close and into next week. But want to thank everybody for stopping by and being with us, not just today, but every day. We certainly love to get your feedback. So please remember to complete the survey as you exit, if you don't mind. As a quick reminder, Market Watchers Live airs 5 days a week, Mondays through Fridays, from noon to 1:30 p.m. Eastern Standard Time. I want to wish everybody a great Friday afternoon, super weekend. Be safe, and we'll see you back here on Monday. Happy trading.
Volatility is back and interest rates are rising. With the markets headed into uncharted waters, ChartCon 2018 is here just in time. See how the experts are protecting themselves and watch live from the comfort of your home or office as they reveal the risk management strategies they use to stay profitable in any market. Plus, you'll get complete video recordings to watch on demand for years to come. Join us at ChartCon 2018, streaming live August 10th and 11th.